Ladies and gentlemen, good day and welcome to Precision Camshafts Ltd Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Shah, Whole-Time Director, Business Development. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. I'd like to thank you all for being a part of the Precision Camshafts Ltd Q3 FY23-24 earnings conference call. In case of any detailed questions regarding finance, please email us your questions at cs@pclindia.in, and we will provide you with answers in a reasonable time for the same. We have submitted our investor presentation for Q3 FY24 to the stock exchanges on Thursday, 29th of February 2024, and the same is available on our website. Investors are requested to refer to the same. I'm happy to share that despite the challenging times that we work in, the total income of the company was 173 crores on a standalone basis and 270 crores on a consolidated basis. The parent business PCL has grown in the last year by better utilization of its foundry as well as machine shops, and we're happy to share that PCL has onboarded several new customers in India and overseas, and we see long-term visibility of contracts for the camshaft business. Memco in Nashik has seen consistent demand. Total income at Memco was 12.47 crores in the previous quarter. MFT in Germany continues to face several headwinds due to the slowdown in Europe, and the total income of MFT during the previous quarter was 33.3 crores. EMOS in the Netherlands continues to show a strong order book, but the short-term demand has reduced due to a slowdown in Europe and diversion of subsidies to other macro factors in Europe, including the war situation. The total income of EMOS during the previous quarter was 51.6 crores. In India, our ELCV development is going strong. We have deployed more than We have deployed more than 20 vehicles with large customers across India and are collecting data for further optimizing the product. We have two variants of the electric Tata Ace already certified and offered to customers, and we have one variant of the Ashok Leyland DOST Plus retrofit electric kit, which is in final certification. We see the demand picking up in the second half of the year after sufficient testing and data has been collected. Coming to the financial performance of the companies, starting with the standalone business of PCL, which houses the camshaft business, total income for Q3 FY24 increased by 1.2% year-on-year to 173 crores. EBITDA margin for this quarter was 24.5% and PAT margin was 13.6%. And coming to the consolidated business performance, the total consolidated income for this quarter decreased by approximately 9% to 270 crores. EBITDA increased by 26% to 40.6 crores. Profit before tax was 36 crores and PAT was 24.4 crores. EBITDA margin at a consolidated level was 15% and the PAT margin was 9%. I think this covers most of the business as well as financial performance, and with this I would like to open the floor for question and answers. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take the first question from the line of Tushar Khurana, a retail investor. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is regarding the range that we can get on a fully loaded retrofitted LCV on a single charge versus the industry requirement. I mean, I want to understand what is the need of the industry for a fully loaded vehicle versus what we are providing right now.
Sure. Thank you for that question. I think we have several variants of electric drivelines for the Tata Ace as well as for the DOST Plus, and these are actually designed in such a way that they are optimized for the use case of the customer. So for example, we have several customers that we are dealing with that do not require more than 50 to 60 kilometers of range on a single charge, whereas there are other customers who require more than 100 kilometers on a single charge. There are some customers that do not require fast charging. There are some customers that do want fast charging. So with the variants that we have available, we can cover the entire spectrum of the industry's requirements. So we have one variant where we can provide up to 70 kilometers of charge, 70 kilometers of range on a single charge. We have another variant which can do up to 100 kilometers, and one variant has slow charging only, and one variant has fast charging where you can use public charging and charge the vehicle within 30 minutes to a full charge. So I think we have the industry requirements covered under the different variants that we have.
Okay. And sir, when do you expect to for this to be finally commercialized? Maybe in second half of
yes, we have actually started selling some already. We have sold our first lot of vehicles. Besides the pilot vehicles, we have also sold some vehicles. These are deployed in the Delhi region, in the city of Delhi, and a lot of these are used for e-commerce applications right now. So we have started commercial sales as well as a pilot deployment with large customers, and I think for us to see demand picking up would be towards the second half of this year after we have sufficient data collected.
Yeah. What I am trying to understand is, say, if any existing IP LCV whose registration is going to expire, say, after 15 years in case of petrol LCV, so are those also some of the prospective clients for us where we can retrofit their LCV and then they can get pre-registered? And what is the is it really viable solution for them if they do that?
See, the more than the age of the vehicle or the number of years, the health of the vehicle is much more important for us to consider retrofitment, because you also have to make sure that the wear and tear on the vehicle is not too bad. So the condition of the chassis also has to be healthy enough for it to be converted. So we typically say anywhere between 3 to 7 years old vehicle should be converted and not older than that. But in any case, based on what we see today, the investment for converting, of course, like I said, we have multiple variants. So somebody who has a small range requirement, we have a smaller battery pack, we have a bigger battery pack, we have fast and slow charging, etc. But if I have to give you a range, the conversion cost can be anywhere from, let's say, 5 lakhs all the way to 12 lakhs. Depending on what the variant is and what the type of vehicle is also. It's not necessarily ACE, it can be also the bigger Dose Plus vehicle. And if you consider, let's say, an average of 6 to 7 lakhs as conversion cost, then the customer is able to save 2.5 lakh rupees per year simply on fuel, which would be replaced by power, electricity. And you have a payback of less than 2.5 years on such an investment. So I think it is a very economical solution, and we have really considered the total cost of ownership as a very important factor in proposing this to our customers.
Okay. Last question, sir. Do we have other players also in India who are doing this retrofitting for LCVs?
Not that I know at this point of time.
Okay.
Not for these
very
vehicle
helpful,
categories.
Yeah. Thank you. Thank you so much, and all the best.
Thank you.
Thank you. A reminder to all the participants that you may please press star and one to ask questions. We'll take the next question from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Hi, thanks for the opportunity. So my first question is relates to exceptional item. So there is a write back of 70 crores and there is a write down of inventory of 36.5 crores. So this pertains to the same program, or write down pertains to some other programs also?
Sir, I think we can answer this question offline to you if that's okay, because we don't have somebody from the finance team joining this call today, but we'll surely get back to you with the exact details of this. I think our Tanmay from our side will note down this query and we'll get back to you.
and there is an impairment of property, plant and equipment. That must be general, so it must not be related to this So whom should I contact for to get the answer?
You can write to us at cs@pclindia.in and we'll get back to you.
No, if you can give in the name of any particular person.
Yes, it's Tanmay. Tanmay is the name of the person.
Tanmay is the name of the person. And my second question is, you said cost regarding retrofitting, the owner will recover his initial investment in 2.5 to 3 years. Is that
correct?
Correct. So, but what will be the warranty for this battery packs which we provide in terms of number of years, Mr. Karan?
Again, depends on the type or the variant that we have, because we have multiple variants. They are different, but it is anywhere from 5 years to 8 years as the warranty, and we give approximately, on average, 100,000 kilometers as warranty on the batteries.
100,000 kilometers.
Yes.
And again, coming back to this camshaft business, since such a large program has been scrapped, so should we expect this machine camshaft volumes to come down further in coming quarters?
I'm not sure which program we are talking about. We don't have any program that is scrapped as of now in the camshaft business.
No. In your exceptional item, this write back is 70 crores, so it must be a big program, no?
But it's not. It is at the consolidated level, so it can be a consolidation of different write-offs at our subsidiary companies as well. I think, to the best of my knowledge, without quoting the numbers itself, I think we have had certain programs in our subsidiary company, MFT, which have been cancelled several years ago, and we have reutilized quite a lot of those machines into different programs already and different customers already. But there are certain customer-specific machines that were part of that program that have been written off in the last quarters. So I think that is what we are seeing. But I think, again, if you please email this to us, we'll get back to you with the exact details. But just to clarify, there are no programs or no contracts in the camshaft business that have got cancelled, and there is no impairment due to that.
So we should not expect any further reduction in camshaft volume, either machine or cast.
Not at all. In fact, we have got new contracts that will add to this.
So I missed your initial remarks. So if you have made any initial remarks regarding camshaft volumes, I would request you to repeat it shortly, sir.
Yeah. No, I have not made any specific remarks, but we do have additional business from Indian customers as well as overseas customers for camshafts, and we have a fairly strong order book at least for the next 3 to 5 years. So there's no reduction there.
So in summary, camshaft business will be on a growth path only, normal growth path only.
Yes.
Okay. Thank you, Mr. Karan.
Thank you.
Thank you. The next question is from the line of Shagun Jain, an individual investor. Please go ahead.
Karan, hi. Congratulations for the good performance.
Thank you.
I have a few questions. One is, in terms of EMOS, I wanted to know, which is your European business, has there been any cancellations in the orders there in EMOS, or we continue to hold the old orders and, a delayed delivery of orders is happening there? This is the first question which I wanted your answer on,
Yeah, so, no, there's no cancellation of orders, but there is a slowdown for sure. So, as you have probably seen with other OEMs in Europe, or in general, the economic conditions in most of the countries across Europe, there is a slowdown. There is a pushback on order delivery. So the order book still stays and is fairly solid, but there is a delay in decision making from the customers. Like I said in the opening remarks, a lot of the subsidies that have been earmarked for e-mobility have been diverted for the war situation at this point of time. We hope that these will be reissued or brought back in the coming months or years. But it's a very uncertain situation right now, and we are in very close contact with all of our customers there. And we think that we should wait until the end of this year to see what really pans out. But in terms of the demand, there is a slowdown for sure.
Okay, got it. Now, on the India business, you have put in a plant, right, for conversion, and you have base. Yeah. You say that, in one setting you can convert a vehicle. So, not a hypothetical question, because you give out capacities and capacity utilization for the camshaft business. For EMOS India, can you let us know what would be the estimated, conversions, number of vehicles that can be converted, per day across all your production lines, whatever you have here, so that we can make an estimate as to, 2 quarters down the line, what is the business size we are looking at from EMOS India?
Yeah, I wish I could answer that, but that's really hard to do because, see, we do have one plant set up in Solapur to do conversions, right? And we are, just give you one number, we are able to convert an entire vehicle start to end in, let's say, 8 to 10 hours or one shift. Now you can extrapolate that and see what the capacity would be. But the point is that we are seeing demand from different areas in India. It is not necessarily from Solapur, Pune, this Maharashtra area. Like I said, we have some demand from Delhi, we have some demand in Bangalore, we have some demand in Mumbai, etc. And if that demand picks up and becomes larger numbers, we have to do that conversion locally. It cannot be done all in Solapur because, as you can imagine, the diesel vehicles cannot be all transported to one location, converted, and then sent back. The logistical cost would be prohibitive in that case. So we are looking at partners or perhaps our own setups, our own smaller setups in closer to our customers where we can do conversions in a much faster and a much more efficient way. But this all really depends, and I can't give you numbers today because it all depends on, how the demand picks up, where the testing results come out and so on. So I think in the next couple of quarters, we should be able to give you a better idea on that.
So that means if we were to set up like 7-8 centers across the country, so it will entail some amount of capex also from our side, right? We'll have to look for places, we'll have to look for, working capital as well. So what is so have you planned out for it, or you have yet to plan out the estimated expenditure over the period of next 2 quarters so that we can provision for the same as we start growing our business rapidly?
Look, there is a provision, of course, that we are internally working out, and whatever capex will be there, it is not going to be significant. It's not a very large setup, right? These are not like OEM automated assembly lines, right? These are more or less very well built and highly equipped workshops that we are able to set up bays where we can bring in a vehicle, disassemble and assemble it within a particular period of time. So it's not a very high capex business or a setup. Of course, the working capital will be required because we need to source all components and do all of this. But that we can fund internally for some point of time. We also have some financing partners on board already who are willing to, finance the conversion to our end customers. So all of that is being put in place right now, and I think that in the next few quarters we should be able to tell you much more about it.
Okay. Lastly, now you are saying that some of the vehicles have been sold to customers also. So these are what, individual customers, or these are e-com players who have bought it from you besides the pilot vehicles? So how is it?
Yeah, these are, so the customer is an operator who basically has bought the vehicles from us and has deployed it to e-commerce companies and so on. So in most cases, there are third-party logistic companies or operators who typically own the assets and then run it for an end customer, whether it's a municipal corporation or a e-com player or an FMCG company. It is typically operators that own and run the assets. So these are who we are working with right now.
How has been the feedback in terms of the first few vehicles which were deployed in the market? Quite good. The ready-made EV available from Tata Ace or those, how does it compare in terms of performance? Do you have any idea?
The performance is at par. There is no reason to complain. I think what customers like with our solution is that it can be customized for their need. And when I say customized, that even the price depends on the need, right? So if you need a 100-kilometer range, then I will give you a product that is priced like that and gives you the performance. But if you don't require that, we have the ability to give you a different variant which is less expensive but gives you the 50-60 kilometers that you need. So I think that flexibility is something that our customers like.
Okay, I'll come back with a few more questions here. Thank you.
Thank you. Participants who wishes to ask questions may please press star and one. We'll take the next question from the line of Tushar Khurana from a retail investor. Please go ahead.
Yeah, just a follow-up question, sir. So the range that you mentioned from 70 kilometers to 100 kilometers, is it on the fully loaded vehicle?
This we consider as an average laden condition. So, of course, vehicles will be either fully loaded or will be partially loaded or will be empty at some point in their trip. So we consider an average of that.
Okay. That's all from my side.
Thank you, sir. We'll take the next question from the line of Pratik Bhandari from Art Ventures. Please go ahead.
Yeah, hi. A very good afternoon to you. Am I audible?
Yes.
Yeah, so just a couple of questions from my side as to whether do you have any plans to get into the EV space in the two-wheeler segment as well?
No, we don't have any plans to do that as of now.
Okay, and looking at the margins at which currently the business is operating, do you see the same margins to be maintained in the range of 10-11%, or do you see a further upscaling in the margins?
No, I think these are the margins that have been consistent in the last, I would say, 3, 4, 5 quarters, and this is what we see consistently going forward.
All right. And in terms of revenue growth, what would drive the revenue growth going ahead?
Yeah, I mean, we have new contracts from customers in the camshaft business. We have the EV customers in Europe that are slow at this point of time, and there is a slowdown in general. But if the demand comes back, then there is tremendous potential there. We are looking at new orders with our customers in our Memco subsidiary as well. So I think in general, the Indian market has been good. The growth rate has been good. And as the customers grow, as the OEMs grow, we grow with them. So I think I can't give you a forecast or a number. But I think we have a good order book in place.
So, when do you see that slowdown, getting converted into a spaceful business cycle for you in terms of the, overseas market?
It's anybody's best guess. I really can't say that because it's a macroeconomic condition. It's a war situation. There is
I'm asking at a broader level. When do you see it getting over? And
I really can't answer that. I don't know. I don't know that. I mean, some would say it's 3 months, 6 months, 1 year. I don't know. I think it's till the end of this year. At least it's a wait and watch situation.
It will going to impact the upcoming quarter as well if there is a slowdown, continuously.
Surely.
Persisting.
Yes.
Yeah. So that's what I wanted to understand.
Of course.
And do you have any capex plan for the next fiscal?
There is already a plan. In the camshaft business, we are building a new plant for assembled camshafts, which we have already declared. I think it's about 50 crores for the plant setup, which is already sanctioned and approved by the board, and this is already under construction. But besides that, we don't have any other significant capex that is planned right now.
Okay, for the FY25?
Yes.
All right. Thank you. That's it from my side. Thank you.
Thank you. The next question is from the line of Shagun Jain, an individual investor. Please go ahead.
Karan, moving ahead on the financial aspects of the company, one suggestion I had is instead of you guys declaring a dividend year on year, can we look at a buyback kind of a thing in this year? Because every year you declare around 10% dividend, which leads to around 10 crores of outflow. Probably a buyback would ensure that the float comes down, and it also enhances the EPS and enhances the valuation for the long-term investors. Otherwise, the money just goes out, right? When you declare dividends, this is something which with suggestion from our side. If you could consider it in your next board meeting whenever it happens.
Okay. Noted. We'll look at this internally.
Yeah. Second is, because you guys are going to do some amount of capex and and some amount of investments will be required for the EV business. Are we looking at consolidating the EV business into separate entity and then looking at raising some sort of capital? Though it will be a wholly owned subsidiary of Precision Camshafts, but some amount of capital can be raised in the EV business, which can accelerate our more money coming in, and which we can accelerate this business with more amount of money which we have. Is there some thought to it or any plans?
Yes, it is under discussion right now within the company, but we don't have a firm plan yet. We have an ambitious plan to actually move away from retrofitting in the coming years and become more OEM like company where we offer our own ground up built product. So that will require significant capex, significant R&D and development costs. So that I think we might consider a separate entity for that in the coming years.
And probably you will consolidate the entire electric mobility business into that entity, and
Yes.
you can. Yeah. So this is something which we look forward to, because all your experience and the expertise which is there, which can create value with a real product coming out into the market. Correct. Something which we look forward to. Okay. Last, third question is, 2 quarters back I had asked you this question of the non-engine components. You had said that, we have got one product approved with the non-engine components, and so where are we on the non-engine components? Yeah, I mean, I have not got any information from you guys on that currently.
So we have one product which is already in production and started supplies also. So it's a braking system component, and we are already machining those parts and supplying them to the customer in Europe. And this is already in the ramp-up phase. So we have one complete machining line dedicated towards this project. In the coming year or so, we will be developing the castings for this product also in-house, so it will add more non-engine components to our portfolio. At Memco, we have increased our non-engine component business quite a bit, which was, let's say, 5-6% about 3 years ago, to about more than 20% today of Memco revenue comes from non-engine. We have another non-engine component that we have developed and working with a customer in Europe from MFC. So I think across all the auto component businesses or automotive businesses that we have started to diversify and actually started the SOP of these products also. So it's not only in discussion phase anymore.
Okay, fantastic. And are we looking at these precision components, whatever you're making, are we looking at further expanding into other industries and sectors besides auto? Probably something like defense and space, and because you're into precision components, right? So is there something on that front?
Yes, I mean, yes, but it all depends on the type of component and which should suit the infrastructure that is available. The good thing is between Memco, MFT and PCL, we have a wide variety of expertise in different types of components, different types of metals, and small components, big components, small volumes, big volumes, etc. So the right fit can go to the right company, not necessarily at PCL, but could be at one of the other subsidiaries. But yes, I mean, we are looking at a variety of options right now for diversification.
Okay. Look forward to more updates on the India EMOS front. Yeah, I mean, if you could give us a little more updates. Last one final suggestion and request would be, as I requested earlier as well, if you could do these presentations and calls during the earnings season, that would be great. I mean, our company seems to be the last one to do calls and earnings presentations, and then the next season starts. So before the 15th of the following month, if it is possible, it will be great. So we all investors are glued into it, and it will be easier for us also as to keep on. Yeah. So this is a serious consideration. Yeah. Please. Yeah. This is a request from our side.
Yeah.
Thank you.
Thank you.
Thank you. The next question is from the line of Vipul Shah from Sumangal Investments. Please go ahead.
Yeah. So what is the contribution of non-engine components to the turnover as percentage of turnover currently, and where do you see it in 2-3 years down the line?
different for different companies within the group, but I don't have the exact percentage numbers right now, and we can get back to you on this. If you can just please drop us an email. I mean, look, we are not saying that only the non-engine business will continue to grow. As I said, we have quite